So again, we are kind of in this home stretch here where now I think we can begin preparing for what comes on Thursday and Friday. And we'll start out today's market analysis just by taking a look at the US dollar index. I still believe we are kind of in an unchanged environment. My view on the dollar index is still bearish as we've just hit resistance here and so far seem to be rolling over. We'll see if that does follow through. And again, my thought process with CPI and PPI, by the way, default outlook for me is that we continue to see what we have been seeing, cooling inflation. In fact, let me see if I can show that to you while we're on the subject. We'll take a look at some inflationary data. Again, alongside this dollar index, it's no coincidence, I think, that inflation has been cooling as well as the dollar coming down alongside it. So we can actually show you those pieces of data to help illustrate the point, again, of what we are looking for as we come into that inflationary number. It's so key. This is again, what we've got here on your screen is the Edgefinder's inflation data shows us that, again, the US inflation number has been coming down. But what you'll notice here is recently that we've kind of been stagnating. We're seemingly having a hard time getting underneath that 3% mark. The question on Thursday is, where is this inflation read going from here? We saw oil come down pretty hard in recent times, and that has been probably a help to core inflation headline. The question is, will it trickle into core CPI, and can we actually start to see the inflation metric get down to that 2% target? And by the way, if that 2% target gets hit, or if we get closer to it on Thursday and Friday, the dollar is probably set to go lower. Why is that? Well, if the dollar, remember guys, for the newer traders in the room, let me give you a quick history lesson that matters so much when it comes to the dollar index. Look at this move. Real quick, type me in the chat if you were trading during this period. I'm talking specifically about the 2022 trading year. If you were trading during that time, type me in the chat real quick. Do you guys remember this period? It was like every day the dollar index was just shooting up higher. And it was a constant reminder from the Fed that inflation is unbeaten and this is a serious problem. And we've got a rate hike until this problem goes away. And for some time there was no end in sight. Inflation just kept going higher and higher and higher. So that environment causes dollar absolute domination. People were scared. Other currencies were getting sold left, right, and center as the Fed was rate hiking, and people said, well, the US has this strong economy. They might be able to weather this storm better than other places. And so they rushed to the dollar, and the dollar just got so strong. Right now, I think we are seeing in 2024, 2023 really was the start of this. We saw 2023 go sideways for the dollar. I think as we go into 2024, my bias is still to the contrary. We see the opposite set of standards right now. We see inflation coming down. Rate hikes are not expected. In fact, we're talking about 3 rate cuts, at least from the Fed. The market thinks there will be more. This environment favors dollar bearishness, in my personal opinion. That is, of course, what we do on this channel. I share my opinions. And remember, they are just that. I am not absolutely, right all the time when it comes to markets. And I know that sometimes I have newer traders who are listening. So let me just say, if you're a newer trader, the greatest traders on earth get it wrong. Warren Buffett bought terrible timings in the stock markets at one point or another, many times. In fact, he's one to quote that of his massive, investment career, it's really come down to a select handful of incredible trades or investments that he's made. So as traders, please understand, I am not a fortune teller. I am not a magician. Traders weigh the odds of things and they play probabilities, and they get it right sometimes and they get it wrong sometimes. My opinion, however, remains until further notice that the dollar index looks weak, in my personal opinion, and that will guide me in the rest of my analysis. If you watch my streams or you watch my videos, then generally speaking, I use the dollar as kind of my core component, especially with this Fed-centric trading world that we're in right now.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert trader signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
All right, so gold, next up on the chart, here's the daily chart. We're coming down to this support level. Yesterday, we had an impressive push off of these lows, and you could actually make the argument that perhaps we had a little bit of a bullish breakout, though it's a little bit too soon to call in my personal view. You know, when I look at this chart, what I see here is that sellers are still very much overall in control, but to the bulls' credit, if sellers were really in control, we would have seen some sort of reaction to this level. We actually saw price breaking out higher. And if we start to see this behavior, I may actually look a little closer at gold. You guys know, if you've been watching, I've been bullish. I've just been waiting for an opportunity to actually find a trade setup.
Tying that into the markets, you know, when everything just works out, like yesterday, that NAS trade just worked out perfectly. Members in the group were happy. It was a win-win for everyone. Same thing as chopping wood, you know, you just get that satisfying feeling of,
That's right,
of
what's
accomplishment.
more satisfying than the NASDAQ 2% up day? Now, what's not as
Exactly.
satisfying is we're pulling back, but are you still in the trade, Frank?
No, I trailed out.
Oh, nice. Very nice.
Yeah, I think so. This year, as a New Year's resolution for trading, I want to have, like, I said I wanted to have 3 funded accounts by the end of the year. And I also want to focus on just taking profit instead of focusing on catching the whole move. I think that, you know, in this market, we're going to see ups and downs regardless. And when you're up, be happy with it. Build your account, especially in the funding world, because I've gone through, I've been through a couple trials now, and you know, failing them is really easy. So instead of trying to catch a whole move and stopping out a break even and then holding on to losers for a little bit and taking stops on those, just if you catch a move like yesterday that we saw, take profit, build your account, look to re-enter on either the upswing or downswing. And
I have a question on that front too, Frank. Indices, I know, are something obviously you and I trade a lot. We also trade gold a good bit, and we'll trade some currency pairs. Question for you on the idea of trailing a bit tighter, being a little quicker to take a profit. Obviously ended up being a really good decision here, especially, you know, for if you had taken profits on, like, for example, the Dow, which has given back, you know, 2/3 of the gain in just an overnight trading session. Question for you though, this year, do you think part of the reason maybe it's considering taking profits a little bit sooner is because we had a massive up year last year, and maybe upside here this year could be limited? So is that part of the reason? Like, fundamentally, do you think stocks have, like, just decent potential to make gains this year, but maybe not the 40% up year that we saw last year? Is that part of the idea, you think?
No, I just think that just the environment we're in, I know that we're getting dovish. Investors were super dovish by the end of the year, but higher rates for longer isn't going to, you know, it's not going to be a 2020 or a 2021.
Yep.
So when you see good swings either to the upside or downside, it usually comes all the way back to where it was. So we could see this, we could see the NAS come down to support again or close or even break below. Like, anything can happen. But just looking at that setup, catching a bounce, catching a nice move, that's just what I'm looking for. And honestly, this year I think it's still going to be a great year for stocks. Don't take my word for it, but I think
Yeah.
out of
I
out
think
of
it's
all
worth
the
mentioning.
years, out of all
Yeah.
the years that we've had in the past couple, this is going to be the best one because we're finally going to get our rate cuts. So
Yeah, we've finally gotten some confirmation on that side, and I think you're also smart to point out something though, that perhaps like the most aggressive bulls out there would think that the dollar is just going to absolutely tank, and that stock market stuff is just going to go parabolic again because they are kind of expecting us to just go back to a time like in 2020 or 2021 where interest rates hit rock bottom again. And I think you made a good point. I mean, higher for longer. I think there's a bit of a change of narrative there. And while I would also agree, I think this year is a year that I am bullish on stocks. I've been very clear about that. I'm bearish on the dollar. I think it's worth mentioning that I don't think we're just going to snap back into a perfect, stock market ultra bull environment. There's something to point out. The Nasdaq between like the year 2000 and 2011 basically was flat to slightly negative. And the reason I point that out is that this environment, rates were actually a factor. But then you look at the following decade, like 2011 onwards, until recently, we had like rock solid, super low interest rates for the most part during that period. And it lended to a massive uproar in growth and tech stocks. If we enter back into a period like 2000 and 2011, your idea, Frank, of like take your profits when they happen and maybe lean towards more value-based stocks rather than just pure growth stocks could actually be, call of the decade even. But of course, it's too soon to say. And again, we're both kind of in the camp that the dollar should fall. The stock markets still can do fine. But I think it's worth mentioning that, and I think it goes well with your point about acting to lock in profits along the way.
and even so, we're not expecting huge rate cuts either.
Yeah,
They're talking
exactly.
like maybe one, and I think it was going to be like 75 points. So
Yep.
like what we saw all of 2022, and I think some early last year was just, we were hiking at an aggressive rate. We were doing like 50 basis points, 75 basis points
Yep.
every time. And we're probably just going to see like one this year. So it's still going to be higher rates or high
Yes.
rates. It'll be lower, but still at a high level. So I think
Right.
it's going to be very much sentiment based, and you'll catch really good days, and then there will be bad days like what we've seen. We'll see like 5% on a or 2% on a day, something like that. And
Yeah,
that's
exactly.
what we're looking
I
for, I
think
guess.
I think it's definitely a little bit of wisdom that's creeped in on us, Frank, because we've seen a couple different environments in our time already. We obviously we didn't live through the 2008 stuff, but we saw the 2021 ultra bullish market where it was one environment. Then we saw 2022, which was a devastating year for tech stocks, down 35%. So we've seen a little bit of each different style, and I think it's important to be aware of your history rather than just only looking at what, like you're saying, the stock markets get super optimistic about rate cuts. Just have to be a little bit cautious that we don't overdo it. Anyways, Frank, I know also that you were looking at gold. Do you have a trade on gold or anything interesting to
Yeah.
on the gold side for you?
I'm still long gold. It
Okay.
never stopped me out, but it's still on the trend line. And yeah, that, I'm just hoping it goes up. It's on support right now. Today is not looking amazing, but at least it's holding. So if it breaks below though, it's going to be tough, because yesterday I was saying the next level looks like 1980s or 1970s, and yeah, it'll just be a waiting game, I guess.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.